Hello, investors. The month of July has been a decent month for your portfolio. We've returned just under 5%, but that is important because the lag that we had in the earlier months is getting reversed. And this is something that we are experiencing across our portfolio. The earlier part of the rally, which was mainly April, May, was an extreme oversold rally. So stocks that got beaten down actually recovered the most. And fortunately, we never had that kind of stocks in our portfolio. So we had a bit of lag or under participation in that phase. But as the market is maturing, and more importantly, as the quarterly numbers are coming, one, the market is able to bifurcate between certain quality portfolios and certain just beaten down or oversold portfolios. And since most of our stocks, as you know, are in the quality theme, which is companies that are consistently delivering good earnings, they are coming into play. The kind of numbers that our portfolio companies are reporting also have been very, very positive. So I think that we would, in the months ahead, catch up the little bit of lag that we had. The fact is that the market is surprising. I mean, there is no getting away. If in the depths somewhere in March, April, I told you where Nifty was 7.5, 8,000, that we would be at 11, with almost a 25 to 30% gain. I mean, I could have bet any amount and nobody would have taken it. So the thing is that this market is surprising, and it's not just in India, it's globally. I mean, what is happening to the US stocks, what is happening to the NASDAQ is absolutely shocking everybody. What's happening to commodities, gold. Generally, when gold goes up, stocks come down. But there is a lot of liquidity, and thanks to the Fed, markets are surprising across the world. So let's kind of analyze what has really happened in the last 4 months, where there's been a tectonic shift, and more importantly is what is our thought process and how we are actually navigating your portfolio through this phase, which we feel could be the start of some new trend that is emerging. Let me share with you a few slides which I think would help us in understand the current market better. So what you really see is that this is the performance of the market till now. More importantly is that the Nifty 500 and the Nifty 50 are up 29% on the bottoms. So the market has actually recovered that much. But what is more surprising is the performance of the small cap stocks. Now, the most beaten down space, as I've been telling you that this is an oversold rally, the most beaten down space is the small cap space. And we know the kind of underperformance that they have had for the last 2 to 3 years. So what you see is that there's a very sharp pullback that has happened in the small cap space. So this is what is a representation. Even the mid caps have done very well. They're up 32%. And you'll find that what is lagging is actually the banks. So this, in summary, is how the market is stacked up. The small caps have outperformed the mid caps, and the mid caps have outperformed the large caps. So there is a movement which is happening towards small and mid caps. In fact, in the 4 months, the outperformance of the small caps is almost toward 10% higher than the Nifty. Now, as you're aware that we tend to be a little biased towards the large cap and mid caps, we tend to be biased towards quality. Now, quality is not what people think that they're all large caps. Quality, as we understand it, are companies that are consistently delivering good earnings. So there is no compromise on that. And as we move ahead, if we feel that the performance of the mid and small caps persists, we feel that there are good companies in the mid and small cap which could give us good returns. You will find that there may be a little bit activity towards that. In fact, we've already started acting towards it. You'll find that we have some new stocks in your portfolio. There has been a little bit of churn, and this churn is nothing but respecting the sentiment or the trends there are. However, we are very, very clear, and especially this result season that is coming out brings out the point that there is going to be no compromise on quality. Because very often when retail participates big time in the market, you will find small caps do well. But when markets correct, the maximum damage to your portfolio happens there. And you will see from numbers that the participation of FIIs and domestic at an institution level is not very high. The participation of retail is very, very high. I mean, to just give you a case in point, I went for a haircut a few days ago, post lockdown, first haircut. And my barber was asking me, "Yes, sir, Yes Bank lena chahiye ki nahi?" So even my barber is interested in investing in markets and he wants to buy Yes Bank. So this gives you a sense of the kind of mood that there is. So we have to be aware about getting into poor quality small caps just because small caps are moving. We will get into mids and smalls. However, the key thing is going to be earnings. And that is something that we are very, very focused on. So this is really the broader theme that we are working in. This is how we are gravitating your portfolio towards no compromise on quality. But if the momentum improves in the mid cap space, you may find that the bias increases slightly. The second slide I want to share with you is the sectorial churn. So what you will again see is that for the 4 months where the Nifty 500, as we saw in the earlier slide, was up 29%, you'll find that the performance in pharma has been outstanding. Fortunately for us, this is a sector where we are extremely overweight. I have been sharing with you that our allocation towards pharma is massive. In fact, it is among our largest overweight positions sectorially is pharma. And we have some very good quality companies like Abbott, DVs, Ipca. So we find that this is a sector where we have caught the trend very well and we are participating in it. A second surprise sector has been IT. And we are also made forays into this because it's very clear that as COVID recedes, even in the post-COVID world, the play of IT and digitization will improve. So there has been a bit of a surge in IT. You can see what's happening in NASDAQ. And I think that there is a trickle-down effect. So again, we are scouting for stocks in the IT space, which we think have the potential to give us consistent earning. So what you will see is that there is a very, very thematic sectorial divergence that has happened to pharma and IT. And of course, energy, 38%. Now, this 38% is essentially Reliance. Again, Reliance is our top holding. So you will notice that our portfolio is well positioned with the leadership, with the trends that there are. However, on the flip side, as far as underperformance goes, PSUs and PSU banks, of course, are the biggest culprit. But what is shocking is the underperformance of the banking sector. So you'll see against a 29% up move by the Nifty 500, the bank Nifty is up only 13%. So this underperformance is definitely been a bit of a drag on our portfolio because we have the three largest banks as an important weight in our portfolio. But we feel that this is a sector which is the backbone of the economy. And at some point in time, it will do a catch up. Here again, you will notice that what we have is the strongest and the best. We have HDFC Bank, we have Kotak Bank and ICICI Bank. So we feel that, yes, this sector has been a bit of a drag on our portfolio. We have an allocation there. But if we do not compromise on quality, sooner or later, we feel that the catch-up would happen here. So you can see the major culprit as far as the market goes is banking. Fortunately for us, as I said, we are very well positioned in Nifty, Pharma, and energy through Reliance, and we are making forays into IT. So this really summarizes the market, our thought process. You will find that we are making some churns. Every result season brings us that. We have exited one stock, but we have reallocated towards area, which is the agri theme. We have added Coromandel fertilizer to your portfolio. We feel that rural India is on an upswing, and we have got into, again, one of the best agri plays in the country, which is Coromandel. We are also making some more forays into some other spaces that there are, maybe a little bit of reshuffle even in the pharma and increasing the role of the domestic play. So this is something that you will notice we do generally around result season. And I continue to be optimistic on the market, very optimistic about your portfolio. The last few months have been a little bit of underperformance because, as I said, that you have seen it's a very big small cap oversold rally. And this really has gotten surprising leadership. However, we find that our stocks are gaining mojo again because we are seeing very good earnings, and wherever little shifts have to be made in terms of getting into the rural theme through Coromandel, we are participating. We are also looking around for something in the IT space. So we are doing those little shifts in your portfolio. However, there is no compromise on quality and trends. And that is something that you will realize. And we feel that as the market starts rewarding earnings, genuine earnings, we feel that our stocks will again come into the limelight very soon. I just want to leave you with, I know all of you are, very many of you are at home looking at the market, a lot of friends giving you a lot of tips, a lot of stocks. But the story I shared with you about my barber earlier is something that's happened to in my life very often, having spent 30 years in the market. So please, at a personal level, be careful of getting into tips, getting into unknown stocks. There are a lot of players, domestic players in the market who are very, very active. And just make sure that you don't get trapped into that. As far as your portfolio goes, rest assured, we've been around for quite long and we will not make those mistakes. The risk is that you underperform in the short run, but as and when corrections come, the pain that you experience by simply getting into kachra small caps is tremendous. With that note, I leave you for this month. Stay safe, and hopefully we would be in office next month, maybe not working from home only, and share my recording for my office next week. Thank you very much.